One. Hey guys and gals, it's Logan Freeman and
Alex Olson.
with the Kansas City Multifamily Minute. We're happy to be here with you in this beautiful month of December, getting ready for Christmas. It's a little bit cold. Hasn't been as cold in Kansas City as I would have thought. I think it's going to start getting that way, but did get outside yesterday and got a nice little walk on. Alex, what have you been up to, man?
Well, I watched the Chiefs game last night. That was important.
Yeah, I couldn't stay up. I fell asleep.
Well, I mean, it wasn't that exciting of a game other than the fact that we won.
Yeah, barely.
Yeah. Yeah, weather's beautiful out here. And thankfully, we've only had that one snow event.
Yep. Well, we're going to dive right in. We got a lot to cover today. We want to bring you guys some new information. I'm just kind of tired of spitting data at you, and data's good to make informed decisions. And we're going to give you a little bit of data today. Rent is on the rise. We're going to look a little bit into 2021 because now all the big brokerages are starting to put out their information about, okay, 2020 was this, 2021 is this, is going to be like this, and why. There's some really encouraging data in there from Berkadia, CBRE, some of the really big players in the space. I like to follow those folks because they have a real-time feel for transactions happening across the country, not just in one market. And then we're going to round out today with 10 questions to ask before working with an out-of-state broker, as well as highlighting 3 properties that we believe to be really good fits for you. Alex, are you ready to jump in?
Let's hit it.
Okay, let's hit it. Alex is sitting in our new office building over at the Hostess. It's right alongside the new streetcar expansion. We will be purchasing that property at some point. We are going to get it leased up and renovated first, and then doing a lease to own on that deal. So we're very excited about that. And Alex is very excited to have a building with some windows and a little less concrete. So good to see you over there this morning.
Hopefully the echo is a little better, than prior.
Hopefully what does?
The echo. It's a little better than the prior podcast where I'm in a concrete bunker.
Yeah, absolutely. Well, we all have what I'm calling pandemic fatigue. And as we await COVID-19 therapeutics and a series of vaccines, the economy continues to look forward. The stock market has reached all-time highs. The price of oil has finally stabilized, and the presidential election outcome seems to be a little bit more clear. Bill Gates recently commented that by the summer of 2021, a sense of normalcy will be apparent. Well, thanks, Bill. I appreciate that. With COVID-19 still raging and the effects of Thanksgiving gatherings still to be determined, all is not rosy, but again, many can see better times ahead. If the vaccines are successful in stopping COVID-19, which we don't know that they will be, but we're hoping so, and if the stock market doesn't fall from its seemingly nonsensical pandemic gains, and if you want to learn more about me ranting on about that, feel free to just follow me on LinkedIn. And if the United States political situation also approaches what was previously thought to be normal, and if there are no massive worldwide near-term disasters, we feel that national rent prices are going to rise modestly. So just a lot of ands in there. Now, Alex and I have been covering Kansas City. I feel like a investigative journalist at some point, looking at these data points. But we have been tracking the rent increases from year over year from last year, specifically in Kansas City, but more or less in the Midwest. And as you can see from on our market commentary this week, the ABODO tracks all these rents, and I really appreciate the work that those guys and gals do. But you'll see that it's starting to kind of get back up to rent growth nationally. However, in the Midwest, certain markets have been extremely strong. Indianapolis has shown through as the strongest, but Kansas City is not far from it. So we've got some nice graphs in our market commentary this week. And then I wanted to talk a little bit about and why does that matter? So that matters because you can start to understand the underwriting criteria that you need to start implementing. So, typically back in March, April, May, June, everybody was like, well, we're not going to increase anything on rents and all of this. We're going to carry more. And that's all probably fine and dandy and probably still should be done. Well, knowing that now actually year over year rents are increasing in the Midwest in certain markets. So you do know that in the back of your head. There's data to back that up. So that's why that matters. CBRE believes that there's going to be a path to full recovery in 2021. So multifamily weathered the 2020 recession better than most property sectors. Only industrial held up better. And market deterioration was far less than in previous recessions. Still, it was obviously a tough year for multifamily as many owners lost rental income plus ancillary income from waived fees, deferred rents, and delinquencies. But CBRE is forecasting a return to pre-COVID vacancy levels and 6% increase in net effective rents next year, with a full market recovery occurring in 2022. Now, the economic rebound will lead to rising multifamily demand, largely from unbundling certain renters moving out of their parents' homes or those of friends as jobs opportunities provide more financial stability and flexibility to live independently. So demand in 2021 likely will fall short of pre-COVID peaks in 2018 and 19, but obviously are going to rise significantly from 2020. So that's fantastic. They also go on to say a little bit more about Class A assets were impacted the most by COVID-19 this year due to higher turnover from young adults moving back home, steady delivery of new supply, and renters seeking less expensive housing. Class B assets, where we focus, should continue to outperform in 2021 with low vacancy and steady rent growth. So Class A assets may not begin recovering until mid-year of next year. This is the last piece that CBRE was very helpful in understanding, and that is the increased multifamily investment that they are foreseeing in 2021. So with steady improving market conditions, multifamily investment volume is expected to increase. CBRE research predicts U.S. multifamily investment volume will reach about $148 billion next year, which is lower than 2019's record level of $191 billion, but a 33% gain over the 2020 estimate of $111 billion. So investor demand for multifamily assets this year was more than previous recessions, and pricing held up quite well. So, but still, a lot of investors moved to the sidelines. That term dry powder is what you continue to hear. With that being said, we forecast a continuation of low interest rates for next year, which are going to help, and Fannie and Freddie Mac, who have sizable capital availability to support that increased buying activity. There's a great graph that shows from 2006 all the way to 2021 the dollar amount in billions of investment into multifamily. So you guys can check that out as well. The last thing I'll say about this, and then we'll talk about working with out-of-state brokers, is that suburban assets in the Midwest and the Southeast regions are going to provide the best opportunities for solid market performance and achieving expected revenues next year. In the Midwest, again, Indianapolis was the best performing market. Memphis did well. Detroit, Columbus and Cleveland and Cincinnati, Kansas City, Louisville, and St. Louis were all amongst the best in the country. Now, when you go into those, I would say, okay, that's great. They performed well, and they might perform, going better into 2021. Think about who's moving to Memphis, Detroit. There's a lot of stuff going on in Detroit. That actually could be a cool area for some folks, but it's freezing there. Columbus, Cleveland, and Cincinnati. No hate on my Ohio people, but I don't know a lot of things that are going on in Ohio that are attracting job and population growth other than affordability. Kansas City, Louisville, and Indianapolis, on the other hand, has some really interesting things going on. And St. Louis can only go up, so that's why they made the list. So most Southeast metros also weathered the 2020 recession relatively well. Some markets out in Greensboro, Jacksonville, Richmond, and Virginia Beach, Atlanta, Charlotte, Raleigh, and Tampa all performed relatively well this year. Alex, anything to add about rising rents and the outlook into 2021?
It's hard to imagine, looking back 9 months ago or 8 months ago, pandemic's here, just starting. And then we get into the thick of things in April, May, Big 12 basketball tournament, all the tournaments are canceled. NBA playoffs are canceled. I mean, it's just crazy. And then here we are, and we're forecasting for 2021 with the vaccine and everything. That proves just yet again that the power of multifamily and that everybody needs a place to live. So
yeah,
and then you pull that out and you look at the Midwest, specifically the markets of the Midwest, and you hit the nail on the head. All those people moving back home or wanting some more space. The Midwest is where it's at.
All right. Well, you heard it there first, and that's why we created this system during COVID. We understood that we needed to stay on top of economic trends that were happening, not only nationally, but also more specifically in our market. And we want to continue to bring not only deal flow, but updates around what's going on in the city and new developments and hot spots to continue to be thinking about, because it's very difficult as an out-of-state investor to understand the different pockets that are going on. So that's why I wrote this 10 questions to ask before working with an out-of-state broker. Are you ready to dive into these?
Let's do it. I'm diving. I got my diving shoes ready.
Okay. Well, I don't know if you wear shoes when you go diving, but if you do, then Alex has those on. Even in hot markets with heavy investor and tenant demand, arbitrage opportunities still exist for those immediately knowledgeable and familiar with the region, Alex and myself. I point up because I have you positioned above me here. So I don't know why you go above me and you flip that up. I'm just kidding. So investors with informational advantages that can find value properties in these high demand markets, Kansas City being one of those, put themselves in the prime position to either immediately unload these properties. We can sell your property as well. For Alex is going to tell you about a new listing that he just recently got. Or hold them for consistent cash flow because of a large, reliable renter pool. Now, that being said, I was positively debating with one of my buddies on LinkedIn earlier today about how he feels family offices are, sitting on the sideline and going to snatch up your deals. And let me tell you, if you study family offices, which is just really wealthy folks that have kind of created either a band of multiple families together to go buy and get diversification, or one really wealthy family that is diversifying into commercial real estate. Two things here. The first being that they're probably not buying the same assets that you're looking at, because they are trying to deploy $5-10 million worth of equity, not $500,000 to $1 million. So don't worry about that part. And the second is their priorities are shifted. They are not looking for necessarily yield as much as they're looking for capital preservation and legacy. So just keep that in mind. When you're thinking about, okay, who am I actually competing with? This is going to be your retail investor doing 1031 exchanges and local folks that are trying to continue to get into better assets in Kansas City. So that's a point just to note there. So what about out-of-state investors that are looking to establish a foothold in a new market? The key is finding and working with a superstar local broker. And the difference between a good broker and a mediocre one, it could mean the difference between establishing a long, trusting, and mutually profitable professional relationship with a reliable broker and spinning your wheels and wasting your time with an incompetent one. Okay? There's a lot of incompetent ones out there. So I'm just letting you guys know that there's a lot of people out there that are going to try to, take this and push this paper over here, and then, you sign here and they're done. That's not how this works. There are so many different things in the transaction process that you're going to need help with. I mean, I could document 5 or 6 things that we've done over the last week for our clients that have added value on top of this. You have to be able to negotiate. You have to have experience, relationships, and you have to have expertise on knowing how to get a transaction done. So there's a lot to unpack there. And, hint, hint, Alex and I very well might start a podcast and talk about more of those things. But for the time being, we're going to just continue to do these episodes. Your success in a new market, which should be Kansas City, and your ability to seek out and take advantage of arbitrage opportunities from finding under-the-radar assets will often hinge on the real estate agent or broker that you decide to work with. The ideal broker will have boots on the ground and intimate knowledge needed in order to serve as your proxy and be your eyes and your ears in that market. So just beware brokers who think every property is a great deal. These brokers think like salespeople who are only interested in making the sale and banking the commission. And typically their commissions don't ever get cash because their deals fall apart. I don't have time for that. Alex doesn't have time for that. We are not running past yellow lights. We are stopping, yielding, fixing them, making the light green, and then continuing. You want to work with brokers who think like you, have your best interest in mind as a real estate investor, and who don't just see you as another buyer. The best brokers will be the ones that speak your language. So how do you find the right brokers, the ones that speak your language? Alex, do you have these questions up by chance?
I don't have them up in front of me, no.
Okay, so I'm going to read off some of these questions that I wrote down, and I think that people really need to be asking the folks that they're working with. And if you ask us any of these questions, just know that we will be armed with the best answer that you've ever heard.
Absolutely, yeah.
Do you own any commercial real estate or passive investments in commercial real estate? That's the first one. The second, what asset segments do you prefer? Is it multifamily, office, retail, or industrial? The third one, if you do invest in commercial real estate when evaluating new opportunities, what kind of financial metrics do you target? What's your target going in cap rate or your terminal cap rate? And what's your target IRR? Those are some questions that will disqualify people very quickly. What's your preferred investment strategy? We've talked about this before, Alex. Core plus, value add, or opportunistic. We are not pushing core and core plus assets on a lot of folks here. Most of the things that we work on are in the value add and opportunistic space. What kind of professional, community, and interpersonal relationships do you foster to find off-market deals? I mean, Alex has been on, 5 or 6 podcasts now talking about how to work with brokers and, find off-market deals. And folks keep asking me how to find off-market deals. And I look, Alex represents me on multiple transactions all the time because you have to be willing to tell people what you're trying to accomplish and then have them go what I call throw the lines out in the pond. You can only fish so many ponds at once. You got to have all these people out there finding new deals. And Alex and I know all the brokers. They're sending us projects to take a look at. They're telling us what the fees are going to be, where it needs to be out, the background of it. We're getting that information out before and fleshing that out before we put them on our list. How many listings do you have at this time? What trends are you currently seeing in the market? What are the economic and demographic drivers fueling this trend? And what are the long-term prospects of this trend? Well, we just talked about for 10 or 15 minutes right beforehand. We do this weekly. So not only are you not getting, just trends that we just pull off of a market report daily, you've got, I think we're up to 53 pages on our market commentary now.
Yeah.
That's close to 5 or 6 months worth of market commentary. So you can go back and look at what we were talking about in July. What particular areas in the market are seeing headwinds or challenges? What areas would you avoid altogether? How do you evaluate and vet your personal commercial real estate investments? What can I expect when I work with you in terms of sourcing, evaluating, and vetting new potential investments? Alex put together a one-pager. It's not really 1 page. I guess if it was front and back, it'd be 1 page, but it's 2 pages. And he walks through exactly what he's going to offer on these transactions. How extensive is your support team? Do you have an assistant or team to help you? Because you can't be everywhere at once, and you can't wear every hat when it comes to your commercial real estate investments. And that's why you need a seasoned commercial real estate investor that's also a broker that you can learn to leverage the expertise of to make your life easier and your profit better. Investing in new markets will require the same trust and the expertise of others in order to succeed. So those are some of the questions that I put together. What did I miss?
The one thing you got to understand as you're going into a new market is, what type of person is this? Like you touched on,
Yep.
is your broker going to give you the time of day? You probably got to put in some effort into him or her to make sure that they're going to actually follow through with what they're saying.
Sure.
And if you can't build trust right away, we've all made mistakes, but you gotta make sure you've got a broker that's actually going to be there for you. And your number one goal, especially if you're 1031 exchanges, you got to have that property close. You don't need to disclose that to the seller, but you've got to make sure that your team that you've selected can get across the finish line.
Yep, absolutely. All right. Well, we've talked about rising rent trends. We've talked about a forecast into 2021. And we've talked about the 10 questions that you should be asking before you work with an out-of-state broker. Alex, why don't you go ahead and start us off on our first property that we're showcasing this week?
Yes. Property number one is 24 units in Independence. And it's essentially two 12 plexes right next to each other. Mixture of 2 bedrooms, 1 bath. Get this, every single unit has granite countertops.
Oh, wow.
Yeah. And maybe 5 to 6 of them have LVT flooring. The roofs are all been redone. Basically, this project is perfect for somebody who wants to get into, a value add project with what you're doing there is putting in better tenants and maybe flipping a unit or two. But so that's number one. Independence, 24 units, reasonably priced. You can see it on our big board. Property number two is a project in the historic Northeast, and it is a very nice set of 2 6-plexes, and those are all 2 bedroom, 1 bath. Each unit's about 900 square feet. This is the historic Northeast, so you can imagine the buildings are quite old and have a lot of character in it. Original wood floors, all that kind of stuff.
Yep.
The other great thing is there's not a whole lot to manage there because it's on a restart program, which is, basically a master lease contract where they lease it out to their tenants and basically pay you a monthly fee for 100% occupancy.
Right. And right now, I mean, that's a huge benefit of not worrying where your rents are going to be coming from. They are government subsidized on a portion of their rents. I sit on the board of directors there at Restart, and so I know intimately how the organization is doing, and I also master lease buildings to them. Not to mention, I also sold this property to the current owners, and so I've seen it transform, and I've seen the work that they have done to the project. When he bought it, I think 3 of the 12 units were occupied, and they spent a lot of dollars getting that property to have hot water, to fix termite issues, you name it. They did it. So, and it's in a fantastic part of the historic Northeast, I might add. St. John's Avenue is a fantastic location, beautiful street. And if you drive, what would that just be west on St. John's Avenue, you actually get to the scenic overlook in the historic Northeast where the old motorcycle tour used to come through. And so if you do come to Kansas City and you do buy this property, we will take you out, or Alex and I will take you out to what's the restaurant there on Rye on the plaza, and you'll get to see a picture from the 1950s of all the motorcycles and all the people that were out front right next to this property. Pretty cool. Just kind of a little story to add there.
Yeah, great location. You get 12 units at a pretty good price up there. With again, no real management cost to it. With the monthly checks coming from Restart, and then the third property that I wanted to showcase. I gotta refresh my memory on that one.
We had the 20, the 12, and then we got Strawberry Hill.
Yes, so Strawberry Hill, which is in Kansas City, Kansas. So it's on the Kansas side. It's in downtown Kansas City, Kansas. And it has a view that overlooks Kansas City, Missouri. So it's a great location. Strawberry Hill's up and coming. It's a very historic location, but it's 29 units. There's a lot of value that still could be added here. If you look through some of those pictures, there's maybe half or so of the units have been completely rehabbed to your very nice finishes, granite countertops, and then another half that needs to be rehabbed. Plus, you're able to add a full studio or one bedroom apartment to the old game room or whatever they called it.
Oh, wow.
And it's a cool looking building. It looks kind of like a California hotel to an extent. They've recently done some painting to the exterior, plenty of parking. You can't beat the location. It's basically Strawberry Hills is kind of what Midtown used to be 5-6 years ago. So Midtown right now, we've got some properties that are selling for 130, 150 grand a door. And this property in Strawberry Hill is selling for well less than 100,000 a door. So you can see in 5 years maybe where that's going to be at, and you're going to add another unit. I mean, there're just a lot of good pieces to all three of these projects, really. But definitely check all three of those out.
Okay. Awesome. Well, I think that people need to be thinking about their plans for next year. It's really important to be strategizing at this point in time. So reach out to us, find a time to connect with us. We've got a little bit more, we've got a lot of transactions going, but we've got a little bit more time to add a few new clients in here to really sit down and think about how to get them started in commercial real estate investing. Do you want to leave folks with any words of wisdom or advice, Alex?
The words of, we talk about other people planning for 2021, right? Our clients and
Yep.
potential customers. I'm also planning for 2021 for my own business. I know you are as well.
Sure.
And it's a fun time to reflect on the positivity that a new year brings to everything. So I'm excited about that aspect.
Yep. And the last thing I'll say is 2020 was challenging, difficult. I'm not downplaying any of that, but do not waste the rest of this year. Do not wish it away. Just because the calendar year, a man-made thing, says that we go from 2020 to 2021 is not going to make you feel better, okay? It's not. What's going to make you feel better is taking action steps towards creating financial freedom through investing in commercial real estate, which will allow you to do more of what you love to do. Spend more time with your family, go fishing, take a little bit more vacations. We're here to help you along that journey. We're here to help you get your next deal going. So if you have a 1031 exchange and or if you are thinking about selling a property, think about return on equity, okay? I've been coaching a few new prospective 1031 exchange buyers. They're asking me, what ROI should I be looking at? Well, if you're sitting on $500, $600, $700,000 worth of equity in a property and you're cash flowing $250 a month, there's something wrong with that, okay? That return on equity is like 1%. We can get you at least 9, 10, 11% on that equity compared to where you are right now. I just ran a model for a gentleman who's sitting on 2 properties out in San Francisco. And I think he's really excited about potentially selling those and getting into something larger. So educate yourself, set goals, do not waste time away. We are definitely not doing that. We're excited to talk with you. Alex, thanks again for being here and adding a bunch of wisdom. Until next time, guys, we'll talk to you soon.
Yeah.